but let's now talk about the cues that you should track from an India market standpoint. All of the stocks that will be in focus as well. We have our research team here with the trade setup. Vivek, Hormaz and Nigel are all here. Guys, a very good morning to all of you. We know that this is going to be a crazy week for our own markets. Vivek, to start things off, the global setup looking quite good.
Well, you're absolutely right. So the global setup, the Asian market setup today morning looking quite good. The GIFT Nifty indicates that we are at least going to start, the Feb series on a reasonably strong note. But like you mentioned, this is going to be a very action-heavy week, given the fact that, you have the outcome of the FOMC meet, you have the interim budget, you have a lot of earnings that will be coming through. So this will be something that will keep market participants on their toes. Now, just looking at the numbers once again, when you're talking about European indices, fresh to highs. When you're talking about oil prices now hovering around the $83 a barrel mark. So that continues to be quite firm. Now, talking about the Indian markets in the week gone by, Indian markets were significant underperformers, but however, remember, it was a truncated week last week. Along with that, frontline indices, falling over 1%. Banking index was the key underperformer. A lot of results disappointments coming in from the banking pack. And one important trigger, FI selling last week and especially in January has been quite high, and that has capped the upside as far as the market up move is concerned. So key events like we mentioned, along with that, also remember Feb 1st monthly auto sales too will start. So very action heavy week in the coming week. A lot of earnings today, so the key results to watch out for: Bajaj Finance, BPCL, ITC, NTPC. Good part is GIFT Nifty is indicating a gap up start today and a strong solid start for the Feb series.
All right, solid start, and then let's see how we move from there. Vivek, thanks a lot for bringing us all of those cues. Let's also bring Hormaz in. He's looking at all of the stocks that we should watch. Hormaz, you have 3 days of action to fill us in on.
Coming in on the back of a long weekend, aren't we? But then there are plenty of stocks to track today. Let's start off with Vedanta. The numbers came after market hours, and the lower than anticipated cost is what drove an EBITDA beat. But the debt has risen on account of dividend payout, so we'll keep that on our radar. APL Apollo Tubes, where the management said that there are signs of restocking that are visible after this domestic steel prices saw a correction. Now, there are plenty of other earnings reactions today with Tata Technologies, Shriram Finance, Yes Bank, Zen Technologies, and despite along with the earnings, they've also approved a 1,000 crore QIP issue. Sanghi Industries, where the losses have widened, and Adani Power will also be reacting to results. Indiabulls Housing Finance has approved a rights issue where they plan to raise close to 3,700 crore rupees by issuing close to 25 crore rights shares. The record date has been fixed for the 1st of February. The issue will open on the 7th of Feb, close on the 13th, and the shareholders, the existing shareholders, are eligible to have one right share for every 2 full shares that they own. The Piramal Enterprises is going to sell its entire 20% holding in Shriram Ownership Trust for 1,440 crore rupees, and this is the second divestment that they have made in the Shriram group of companies, because last year they had exited Shriram Finance by selling their 8.5% stake for close to 5,000 crores. Jubilant Pharmova, where the wholly owned subsidiary is planning to sell its entire 25% stake in Sophie Biosciences for around $140 million, and the proceeds for that will be used to reduce debt, capex, and for general corporate purposes. Laurus Labs is in focus as well because of the new joint venture. HDFC Bank will be in focus because LIC has received a nod to increase their stake up to 10%, and Coal India has emerged as a successful bidder for a 300 megawatt project in Gujarat. Back to you.
All right, Hormaz, thanks a lot for taking us through that entire list of stocks. We're going to watch for all of these in today's trading session. Finally, Nigel is here with all of the cues from the futures and options space. Nigel, what are you looking at?
Well, morning, Pavitra. Now, we put an end to the January series, and if you pull up the intraday charts, you'll see that the last hour, the recovery that we saw both on the Nifty as well as the Nifty Bank, that was expiry related. So we could give back some part of what we put on in the final hour of trade. January jinx, well, it continued as we've been making this point, and we ended with a cut of around 2%. In fact, it was the worst January series that we've seen in the last few. So we kept that date with the bears, and that's why, in fact, we ended lower. How is the positioning in the February series, though? Well, at the start of the series, the FI is their net short. Remember, that's not such a bad thing. We've been telling you that in the past as well. In absolute terms, the net short contracts are more than 1 lakh contracts. So that, in fact, at some point of time, it provides some bit of a cushion because you can get a bit of a short covering bounce, and history has told us that as well. I'm looking at 2 strikes at the start of the series. The 21,000 put, well, that has a fair bit of open interest build up. That's a total open interest. It's not the change, it's the total open interest out there. And the 21,500 call as well, the total open interest over there. So, you just look at it and you'll see that, in fact, the markets are positioned that on the downside, the 21,000, the 20,950 mark, that gets defended out. And in the last few days, we've gone to around the 21,100 odd mark, and we have seen a bit of a bounce from there. The 50 DMA as well comes in line with them. Those numbers should come up for you on the screen. while you'll get confident that the markets are breaking out only once we get past the 20 DMA on the upside, which is going to be the crucial level. So let's see how this goes. But for the time being, expecting the market to trade in a bit of a range. And as I mentioned earlier, the markets being net short normally is not such a bad thing because it provides legs for a bit of a short covering bounce. Back to you.
All right, Nigel, thanks a lot for taking us through all of those cues. That is the trade setup as we see it this morning.